Good morning and welcome to Tanks Invest. Talk about investing, finance, fresh development. For today's fair times only. The investment on top of today will be Ethereum ticker ETH. First, want to say happy Monday, everybody. Hope you have a great weekend, by the way. Respect to Ethereum, I'm recording of 9:33 a.m. on the Eastern Time. Currently, like the $2,590, up about 1.17% so far. And with respect to the news that I've been collecting this morning, I've been reading for about an hour and 15 minutes so far. Collectively speaking, I would say we have a little bit of sprinkle of positive news, but also with some foreshadow type of, I wouldn't say negative news, but just news around regulatory dynamics going forward, right? And just to keep tabs with what are the news that we've been percolating so far. Number one is a positive news coming from Bitcoinist. And this news is, the title is called Institutions Stake Ethereum 2.0, but the investment grade way, right? It's basically talking about, with respect to a lot of the investment banks, including like JP Morgan, Goldman Sachs, and I think other banks as well across the world going forward, it's going to issue Ethereum, and they're going to be staking with respect to the specific assets that they're going to be proposing to their clients going forward, but by packaging them into an investment grade trust, which is something we're currently seeing right now from JP Morgan and Goldman Sachs, right, with respect to the great scale Bitcoin ETF trust, and also with respect to Ethereum Classic Trust, and also with respect to Ethereum Basic Trust, if you may, right? So they basically just another reinforcement news on obviously investment bank packaging these crypto assets into more formalized investment grade way to offer to their private clients and also institutional investors at the same time. Right, another one would be coming from Cointelegraph. And this news is about another name drop, if you may. This guy named Joe Lubin, who's the founder of Consensus, and he's basically talking about his belief into Ethereum and why NFT are basically next for the enterprise Ethereum going forward, right? So another news coming from Cointelegraph that's trying to name drop someone that's well known in the industry, putting their name next to the stamp of approval for Ethereum, obviously, right? And then we have some collections of, I would say, not negative news again, right? Just more news around the regulations. And with respect to the updated bipartisan infrastructure bill, that's still currently under debate in the Senate. With the updated version, it will be financing part of the cryptocurrency transactions. Now specifies that only persons that provide digital asset transfer would be treated as brokers, right? So why is this an updated draft, right? So initially in the first draft, there was no explicit verbiage on describing this specific aspects of the equation, right? Even though the bill has been updated now, there is no reported or no specific exclusions in the place for miners, nodes operators, and software developers, among others, right? As per the the bill's new language, right, in the depictions, any person whom, quote, for consideration is responsible for regularly provide any service effectuating transfers of digital assets on behalf of other person. Right. So why does this matter? Why does this revision of this, this bill, this infrastructure bill matters, right? The main issues is surrounding, the requirement of transaction, basically, right? And the impositions of existing tax rules on transactions, right? The reason, we've been experiencing public pushbacks for this specific bill, because the mantra of decentralized assets like cryptocurrencies is it shouldn't enforce any sort of regulatory compliance pressure at this level, right? We are not dealing with like equity ownership. We're dealing with something that's a commoditized based type of assets, right? And with the mantra of decentralized, when the word says it's decentralized as a basis, to enforce any transparency rules or taxation on something that is supposed to be, unregulated, obviously it will drive some pushback. So again, this is still a draft. It's still obviously in progressions of further refinement, right? So that's something we need to look out for, because this could be interesting into how that can be applicable to the regulatory dynamics onto potentially hindering our profit margin going forward, right? So something to look out for. And then other news that's coming up would be from Bazinga this time. So this is basically a depiction around the London hard fork that's happening on Wednesday coming up, which is basically 2 days from now. And the verbiage is basically talking about the anticipated pressure, what will the 2.0 become, what will be the new features that will be included into the 2.0, and what will be the foreshadow implications for the price level for Ethereum going forward, right? In addition to the news that we just saw on the U.S. infrastructure bill, there's another comparable article on the depictions around a new crypto bill that the U.S. Congress is currently working on right now, and that's being led by someone named Don Beyer. And the bill is called Digital Asset Market Structure and Investors Protections Act, and it's a relatively comprehensive one, 58 pages in total, right? And on a high level read so far, what it really talks about, it's basically an exhaustive list of regulatory regime for digital assets, right? And it basically defines things like what or which crypto assets is considered to be securities, which can be treated as commodities, and bolster tax data collecting for reporting purposes. So it's a really, really comprehensive one. It's almost like a checklist of what is not to do, what are the things to do, what are the tax implications you need to follow. Another form of, comparable to what Janet Yellen has enforced on us, right? The stable coins initiative that she's been proposing, right? It seems like the U.S. Feds is definitely enforcing some regulatory pressure, right? And just to keep tabs, right? Ever since that Janet Yellen stablecoins initialization to the U.S. infrastructure bill on, tweaking the language a little bit to provide a little bit more regulatory pressure towards crypto assets, to now this Don Beyer crypto bill on enforcing more regulatory structure, more frameworks for compliance and taxation implications going forward. So obviously, it makes sense, right? But it also is counterintuitive to the mantra of crypto assets as a whole. Ultimately, this needs to go through approval for the U.S. government, right? It doesn't just go through one side of the house, right? This is just drafts, with respect to even the stablecoin, to the U.S. infrastructure bill, to this new crypto bill. These are still, drafts that needs further revision going forward. So we definitely need to keep an eye out on these respective initiatives and how that could hinder the market dynamics going forward. But we in the business of risk mitigation, if you believe in the long-term value proposition of the respective crypto assets that you're investing in, then you should be just fine. But we will potentially see some volatility coming if there are some potential reinforcements for these respective initiatives, right? It just makes sense that way, right? So I'm going to go to a technical analysis for Ethereum respectively and see how that goes from here ahead of the London fork debut coming up. So stay tuned. So let's make some money. So moving on to the technical analysis for Ethereum ticket ETH, on regards of 10:06 a.m. on Eastern Time, current trade like the $2,630, up about 2.77% so far. While respectively on the other side of the spectrum, like Bitcoin is currently down about 0.19%, Dogecoin is not really moving, it's just up about 0.46%, Cardano respectively kind of comparable, but the equity market is relatively green today, so the surge that we're seeing right now is adjusting for the anti-correlation effects as well. So technically, Ethereum should be jumping higher if the equity market was not as propelled as the level that we're at right now, right? So let's take a look at the momentum right now, right? Obviously, this drive of surge is, there are a lot of positive catalysts that we've been having, right? Consecutive positive news, since the B-Word Summit. And the surge that we're seeing right now is the typical anticipated pressure ahead of the London fork debut that's coming, right? So with respect to MACD, you could see how extremely dragged up right now we are, right? You could see that RSI, we are basically overbought at the level right now, right? We are overbought. Like if you compare to historical level, when we're extremely overbought, we're basically at the level of the threshold, like basically a couple inches away from that equator line, right? And then you will be leaping up all the way to the top, right? If we were to break the next level, right? And I think ideally, knowing the fact that today's high is 2,637, so we kind of normalize a little bit because we do have a little bit negative news today because of the, obviously, what we talked about, the regulatory dynamics news, but also with some anti-correlation effects coming from the equity side. So some people are liquidating crypto into chasing the pump for the equity side of the house. So that kind of makes sense, right? So we kind of, we should have jumped up a little bit higher, right? But we are ultimately in between levels at the moment, right? We are basically between the levels of 2,450 and the 2,750. And we're basically in the middle, levitating at the moment, right? And I think based on the fact that we have the anticipated pressure that's going to durate from tomorrow, today obviously, and I think half of Wednesday would be possible. We should leap potentially up to, obviously test that 2,750 first. If we get there 2,750, we will leap up potentially to hover between the level of 3,000 and 2,750. And I think the likelihood of actually getting to 3,000, I'll give that maybe like a 40% likelihood that we could potentially get there, depending on how positive news are percolating in the near future, right? And then we should sell off from there because, again, right, we've been running very hot already for the last 12 days so far. So for it to cool down, it's just a logical move, right? Would I be buying now? I think we should have bought way long ago because of since the B Word Summit, and we knew that the London fork was happening, and I've been mentioning the London fork was happening weeks ago. You know what I'm trying to say? So, but if you want to buy now, that's fine. If you want to incur the risk, it's up to your appetite. And I think if you have a high tolerance for volatility, knowing the fact that we have a high likelihood of potentially selling off, coming back down to ideally the first level 2,450, and then 2,250, and then 2,150, which is the level actually I would ideally dollar cost average at, then that's fine, right? But again, just know that whatever goes really, really fast comes down just as fast, and the trends is comparable to the ones we saw back in April, right? And again, we know that the leap up's not going to be as severe as the one we saw before, right? We have had enough consecutive positive news already, right? That for us to get to, let's say, 4,380, you will basically destroy the whole chart, and it will not be logical. It will create a huge outlier that it will just immediately sell off because the market dynamic will be so flaky that you cannot build a tall building with just like little cotton balls, if you may, or marshmallows, right? You need to provide more ground, more substance. And ideally, I would want to get us to the 2,750, consolidate a little bit to basically build a new ground for us, right? And that will give me substance that, I think by then, if you form that ground, the bottom would be 2,450 then, right? If we get there, right? If we get there, I don't think we'll get to the 1750 in any time soon. At least for not like months or even quarters, if you may, right? Because that's like the continuation of the bull rally, despite the normalization of correction that we've been experiencing so far. All numbers in the technical analysis again, right? We're running hot with the consecutive positive news we've been having so far. We have some normalization today from the anti-correlation effects from the equity side. We do have some news on the regulatory pressure that's coming, so which is kind of compressing to the level that we ideally want to get to, the 2,750, right? So ideally for us, I think in the near term, I think after London fork, we probably want a dollar cost average of 2,450, which is the ideal level that we would potentially leap down to. But ideally to more of a comfort level, 2,150, which is the level that I will be eyeing to buy more at. Right, anywhere around like 2,250, 2,150, you have that green light for you to buy, right? But if you want to buy now, that's fine. You know, long term wise, 12 months price target 9,800, 4 times your money from here if you buy the 2,450. So further, respect my technical analysis on Ethereum ticket ETH. Hopefully, guys, this is helpful. And again, I will be at home, you know, most of the day today, just in between meetings. So feel free to give me a shout if you have any questions, and I will respond back to you accordingly. But yeah, try to stay sane, try to stay, logical in terms of how you execute your price level going forward. I do understand that, you know, we are, you know, the FOMO effects can be difficult to manage, right? And but it's important that you see the charts and how that is applying, you know, using psychology and then obviously looking at the supply and demand dynamics to, you know, formalize your price execution going forward so you're not losing money, right? We're in the business of risk mitigation, and the risk profile right now is relatively high, and that's why regurgitating basically my care for you guys to hopefully you guys are making the right decisions. All right, so stay tuned for this coming up. Take care. Bye.